For any company employing foreign nationals in the offshore gaming sector, Section 25G of the tax code is a mandatory requirement. Failure to comply triggers a chain of events, beginning with heavy financial penalties and ending with immediate deportation and blacklisting of your foreign staff. To prevent this, we are going to walk through the four-step compliance pipeline designed to register, calculate, and remit these taxes accurately every month. Before starting the process, ensure you have your current foreign employee rosters and any unsigned employment contracts ready for review. Following this specific pipeline ensures that each legal requirement of Section 25G is met, protecting your operating licenses and the legal status of your workforce. Step 1 begins upon hire. Every foreign national must be registered for a tax identification number. This rule applies to every employee, regardless of their specific visa class, the length of their contract, or their job title. If you engage a foreign national without a TIN, the company faces a fine of 20,000 pesos for every undocumented worker and the potential for a permanent hiring ban. Once the registration is underway, you move to Step 2, the finalization of the employment contract. All compensation details must be explicitly stated in the document. This includes the base annual salary and any additional benefits or entitlements the employee receives. After these details are confirmed and the contract is signed, the document must be officially notarized. Submit the physical original copy of this notarized contract directly to the Bureau of Internal Revenue. The BIR will reject any photocopies or digital reproductions. Securing the TIN and submitting the original contract forms forms the legal basis for employment. These requirements must be satisfied before the employee receives their salary. Step 3 is the calculation phase. You must carefully tally the employee's total monthly compensation to establish the tax base. Gross income includes basic salary and all in-kind benefits. Apply a flat 25% tax to this total. On 100,000 pesos, the 25,000 tax clears the statutory minimum. But on a 40,000 salary, the 10,000 tax is adjusted to the 12,500 minimum floor. This newly calculated amount must be remitted directly to the BIR every single month for every foreign employee on the payroll. Accurate reporting is essential. The BIR, DOLE, and Bureau of Immigration now share data and conduct joint inspections to identify discrepancies in reported income. The existence of the 12,500 peso minimum floor, combined with this interagency surveillance, makes any attempt to manipulate the tax base a significant risk to your operations. To review the pipeline, you must secure TINs, submit original notarized contracts, calculate total gross income, and apply the 25% withholding tax while respecting the minimum floor. Adhering to this specific sequence ensures that your company remains in good standing with the BIR and that your workforce stays legally compliant. Integrate these 4 steps into your standard HR onboarding protocol to ensure that every new hire is processed according to these regulations from day 1. By standardizing this pipeline, your company replaces the uncertainty of Section 25G compliance with a predictable